everyone, Jenner here, slingshotfutures.com. Welcome to the Daily Futures Market Outlook for tomorrow's trading. Tomorrow being the 7th of February, 27 of 18. Pretty interesting day after the record-breaking Dow drop from yesterday. But before we jump into the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you'll be able to register for our email newsletter list so you'll be notified every time one of these videos comes out. And along with that, in the email itself, we go over a bunch of other things that we don't have time to cover in the videos. So stocks, options, futures, forex, crypto, if it's moving, you name it, it'll show up in there at some point. So make sure not to miss any of that. Of course, also, if you haven't done so already, click on the live trader subscription and trial info so you can sign up for a free 3-day trial in the live trade room. That we can get your feet wet and kind of hang out with us for a couple days and see how we approach our trading during the market hours in the morning session. And yeah, you can see how we like to trade every day. So taking a look at the markets, first of all, the euro has pulled back with a little more continuation to the downside. We have finally achieved that retest of 23,695, and that full test, right? We missed it twice over here, and they finally came back after that lower high to get the actual physical test. So now that is out of the way. A lot of buyers obviously jumped all over that. Not a big surprise. It is a large anticipated area of support. Now that we have buyers in, we can see the reaction. We have a strong bear bar into an immediate reversal. Now, this candle currently has about an hour and a half left on it, and if we do get more continuation through the upside and we break above this bull candle, or conversely, we do not break back below this low, that adds a huge amount of confidence to the buy side where we're likely going to reattempt those highs again. Now, of course, we do have falling resistance kind of coming through here that we're going to have to keep our eyes on, but for the most part, this is a very strong potential reversal signal with a strong bear bar down and then a twin reversal right back up again. It just looks like the buyers don't want to buy that high, so they're trying to buy a discount. Frequently, when you see this kind of move, you'll notice that the market likes to pull back about 50% of that big bull bar as a level of support. So if you're looking for something like that, that would show that the buyers are likely looking for some level of support at 23,910 or so to buy into the dip and then look for the rally back up towards new highs. Either way you slice it, the buyers are likely coming in on any type of pullback, and the best pullback would be at 23,910, back down to retest 23,695. Provided it doesn't break this low, we should be all systems go to the upside. If we do start breaking down to the low, then we could be in store for a little bit more of a range-bound sentiment that might end up lasting quite a while. But for right now, we look like we have a range failure at the bottom, fake break low into that major level of support that we've been talking about for the past week. We finally have it, and we can see that the buyers are interested. So we're going to be keeping an eye on this area for sure, and 23,910 in the overnight is definitely a big level that I'm going to be keeping my eyes on. Over on gold, gold for the most part just kind of continuing the slop and chop that we've been dealing with really for the past a few days or so. Not a ton, but we can definitely see that we are still just kind of grinding lower inside this same channel, same type of formation. Not really anything new going on. We're just stuck inside of this sort of flag-looking pattern. Now, we have came back to retest that major support at 27.5. So far, it doesn't look like there has been much response there at all. And if we do start losing ground on this 27.5, the next objective then will be pulling back to the previous start point of this big rally up, right? We had this huge rally up. It paused out for a little while and then led into continuation. With that continuation, the markets love to come back and retest those beginning points of that upward bias after the pause. So that would be the next major zone of interest, and that's going to be right around 1310, really right around 1307, 1308 in that area. But right around 1310 to 1305, that zone should be a pretty big area of interest that we want to keep our eyes on as well. So 1305 right there to 1310 is going to be a hot spot if the market does end up wanting to pull back a little bit further and start losing its ground underneath 27.5. We still have a good amount of bearish continuation. This is the bearish continuation we were looking for yesterday. They weren't able to get it in the overnight session, led into a quick little snap higher before catching the move down. But either way, we did end up getting that next leg lower, and now we're dealing with a situation where they're likely going to continue finishing the move off. We have a pretty big target, really, just to kind of confirm that we have this low of the channel, right? It hasn't really been confirmed because there hasn't been a secondary test. Really, this is what you could consider a 3-point channel. You've got 1, 2, and 3. They're looking for that 4th test for confirmation. We haven't had that yet. So a little bit more downward pressure is needed from gold before we can start finding some buyers a little bit further down, likely around 1320 if they are going to try to hold that channel. On crude oil, Still in a range. Really choppy, sloppy. They tried getting a good bear breakout below, and, well, it didn't really do so well. It got stuck right back on top of that same channel line from before, and this is one of those same situations. 1, 2, and 3, and now we are gaining confirmation, right? So we're seeing that, yep, the market does want to pay attention to this channel low for at least now, so we need to be paying attention to it as well. Level of support or resistance at 64.91, of course, so if the market does want to cycle back up, you know, we do have that area of once support turned resistance, and we also have a major trap low swing zone, which would be down just a little bit further if we can get a quick snap lower at around 62.85. So that's the next kind of big area that I'm keeping an eye on. Now keep in mind, it is Tuesday, and we have in about, I'm recording this at 4:20, and in about 15 minutes or so, at 4:30 to 4:35, we have the API numbers that come out. So that can have an impact on the analysis, but as of right now, a trap below 62.85 or just holding this channel low one way or another, looking for buyers to be buying these dips for rallies back up to retest 64.91. And then the index markets recouping a lot of that big loss that they saw yesterday. Big slide off the bottom. We're now putting in a little bit of a V-bottom correction. They have by no means taken back everything that they did yesterday, but it is a good start. Now, again, we have to cycle back and say, well, do we think that this bear move is done? It's a little bit of a 50-50 shot right now. They haven't taken back that much of the sell-off in all things, you know, all things considered, less than half of that big slide from the highs. So with this kind of move down, I have a hard time not believing that we're going to find a secondary leg. We have a monster rally lower, or a monster drop lower, likely to find continuation sellers for one more test at the bottom. But that said, this is a pretty strong reversal against that, and a V-bottom usually ends up putting price right back where it was. So we do have a chance at the markets rebounding all the way back up, but it's probably going to take a little bit longer than it took for the market to fall. As we always know, market falls tend to happen a lot faster than market rises, and I think this is another one of those situations. We can see the market fall happened in a handful of candles. The rally up, we've only gotten, you know, a little less than halfway up, and it's taken the entirety of the next day to do what, you know, half of the previous day did. So it will take a little while if this is going to continue to V-bottom out. If it is ending up with a V-bottom, we shouldn't see any bearish conviction at all. Bear bars should find complete failure, probably trapping underneath it. You'll see a situation where you have a bear bar, something like this, and buyers will buy directly underneath that candle to trap in more sellers to shove the market back up. And this kind of feels that way right now. So the index markets are showing a really good amount of reversal to the upside. It's just a matter of if they want to follow through. In all honesty, if we look at the bigger picture, especially if we zoom out to something like the SPY and load this up on a daily chart, this still isn't that big of a pullback. If we mark up the pullback, we're looking at roughly about a 10% drop. We were talking about yesterday how it was, you know, 9.8, something like that, close to 10%. And a 10% drop in a strong uptrend is definitely a buying zone, and there will be a lot of buyers that stacked in around that 260 to 255 area, just buying everything they can inside of there. But when I'm talking about a correction, I want to see a corrective phase of some substance, right? Or what some people might call a crash. I want to see, you know, 25, 30, 40% on the correction to maintain health, because right now I'm still in the camp that this is an unhealthy bull trend. We're starting to get a little bit of health. This is definitely healthy, seeing a pullback, but I would like to see more of this pullback to really gain some sentiment to the upside, to really kind of aid the bull's case. Right now, the buyers are way overdone, way overdone, and we need to see more of this correction in order to maintain health on the upward swing. But all things considered, we are potentially putting in that V-bottom, so we do want to pay attention to that as well, especially on the S&P and some of the other indexes. So that's going to do it for the overall outlook. Overall, you know, really what we're looking at is what the market wants to respond as. You know, likely we were going into today with a higher probability of the sellers continuing, and they failed. Now we're looking at a potential V-bottom on the S&P, although I don't think the low has been put in yet, or at least I would rather see it go down again to maintain health. It does look very strong to the upside, so going into tomorrow we're going to have to wait and see, but I do believe that sellers are probably still building into this for that last attempt at trying the lows. At this point, they might have a hard time getting back down to the lows. Floating ahead of the lows at around 25.60 half could be the next big area of support, but we'll have to wait and see. So, as always, like we always say, doesn't matter what market you're trading, always make a plan, trade that plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.